So for the very first time, guys, the US and the euro are basically in parity. They're basically worth about the same. Now, I grew up in a third world country, Dominican Republic, and there we used to use, for example, the Dominican peso. And when I moved out of there and went somewhere else to actually live, and back then we basically used the US dollar, whenever I would go back to my country and trade my US dollar for some pesos, I would always receive more pesos, right? Because our currency is stronger than their currency. However, though, when my uncle would come from Europe and trade in his euro for basically pesos, he would always get more than I would. Because apparently, according to the guy back then, he told me, Tommy, the euro is stronger than the dollar. However, if me and my uncle went today to one of those places, guess what? We would get somewhere around the same amount of money. And that's been the first time in the past 20 years. So what exactly does this mean for you and me, our wallets, our investments, our money, and what exactly are we supposed to do about it? That's what we're going to break down in this video. Now, as always, guys, like this video on top of also subscribe and hit the bell to get notified. Now, the very first thing, guys, to break this down and to make it make sense, you got to understand that basically, if we're talking from a business standpoint, and you have a business, you have a company, and this business is going, for example, to through extreme hardship, guess what? Their credit rating is going to go down. They probably won't receive that much money anymore, or if they do borrow money, they'll borrow it at a high interest rate. Now, how does this translate to currency? Well, in reality, if you have a country that's experiencing a high level of hardship and they have their own monetary currency, well, that currency might not be as valuable anymore because we don't know exactly how long this country is going to be around. And that currency, notes, is actual currency, might be worthless if that country basically evaporates, okay? That's a real thing. So that's why, for example, in 2008, we had the whole housing crashing and everything was going out of whack. Guess what? Our US dollar lost a lot of value because other countries are like, yo, this thing is going all the way down. But we made it, we're here, we bounced back, okay? However, the same thing, common sense says, is going on with Europe. Russia, war, Ukraine, threatening Europe, West Europe, that, hey, we're gonna cut off the gas, okay? And if they do that, energy prices are gonna go throughout the roof. So if that happens, obviously, there's a massive scare when it comes to the euro, and that's what's causing it to actually go down. Now, what does this mean for me and your wallet? Well, first of all, when it comes to imports and exports, if, for example, according to Forbes, by the way, because Forbes had a really good article on this stuff, I'm also going to link it down below if you want to read it. But overall, if, for example, we're trading at the same level now, so our US currency is basically the same level as euro, and we no longer have to basically pay more when we're actually converting. Well, in reality, what it means is when we're importing, we're getting discounts now. When we're basically exporting, we're actually getting things to sell for a higher price. So it actually helps us overall. Now, also, according to a Moody's analyst, they're actually saying that this might actually cause a very steep discount when it comes to us flying over to Europe because their currency is less valuable now, okay? So it basically means you might see a discount in 10 to 20% when it comes to tickets to you to actually go over there. And overall, it just means that overall, our US currency is going to be a lot stronger. Now, before you start smiling and saying, Tommy, this sounds like a lot of good news for us, you know, the truth is, you never want to be too happy when your neighbor is going through something because you're also dependent on your neighbor, okay? And that's never a good thing. So let me explain. Although the euro is going down, our US dollar is strong, and this makes a lot of sense in the short term. Where it actually is doesn't matter as much as what's causing it. Because, for example, if Europe goes into a recession or a depression because of what's going on in Russia, it's not going to be a good thing for any of us, okay? And that's basically not what we want, especially when we live in a world where we're so interconnected, okay? So if that happens, that's going to be very, very bad for all of us. And let's not forget that although we're seeing these headlines, oh my gosh, 20 years, oh my gosh, it's so cool, look at this, euro, dollar, same thing. When I go do something outside of the country, I can basically do this. Companies can actually get better deals now. Oh my gosh, great stuff for the US. But overall, we're having a lot of problems too, guys, okay? Don't forget that the Fed is being very aggressive to raising interest rates to basically lower inflation for us because our inflation is going out of whack. Also, our savers are being evaporated because as inflation goes up, your savings are basically trash, okay? And that's not a good thing. And as interest rates rise, basically our stock market is doing like garbage too. So it's not like, for example, to say, hey, this is a good good thing, let's not forget that we're also having issues that we're trying to fix at the same time. So it's not to say this is good, forget about this stuff that's going on. No, we're still having issues. The whole world is having issues. We have a war, we have currency dying over in Europe, and we also have inflation rising over here. It's not pretty. It's not pretty. It's one of those things. It's one of those events that your kids will learn about in history. There was a pandemic, they printed a lot of money, the world started crashing, and then slowly but surely after 10 years, we recovered, okay? Hopefully it doesn't take 10 years, okay? Hopefully it doesn't, but that's my point. It's one of those things that you don't know what's going on and how extreme it is until you actually look back, and hindsight is always 20/20. So now let me tell you exactly what my strategy is as far as this whole thing with currency that's actually going on. First of all, I tend not to worry about things I can't control. Now, I don't know about you, but I don't have a connection with the Fed or Senate monetary policy or European or the currency or any of this stuff, okay? So there's nothing I can do about it. So my main reaction is this, as always, okay? First, if I'm investing, I'm continuing to invest because investing into equities and into assets that are going to rise over time is going to be a lot better than have my money basically die in a bank account. No matter how high the yield is, the yield's only that high because the Fed raised the rates and inflation is running rampant. So overall, I'm still losing money by doing that deal. However, I always keep money in cash, and it's money for two reasons. First, money for my emergency fund. If things go bad, really bad, I lose my job, you lose your job, then we got to make sure that we're taken care of. So have at least 6 to 12 months in there. 12 months is a very long time, but it doesn't seem that long when things don't look that great. You know what I mean? So having 3 to 6 months, potentially 12 months of your expenses in there might not be such a bad deal. Second, if I have money for upcoming opportunities into the future, for example, I might be buying some real estate this year, or I might be investing a lot of money this year, I have that money on the side for when that opportunity presents itself. But I'm not gonna have money in there that's just going to be sitting there for the next 5, 10, 20 years because, of course, inflation is going to make that money evaporate, okay? Evaporate. So overall, if you're investing, keep investing, take advantage of the downtime. Also, if you have savings that you just have there for no reason, reconsider what you're doing with those savings. But if you just have money for emergency fund and for expenses that are going to be coming up very soon, for example, like a wedding or buying a car, down payment on a home, or investing into something big, the answer is it might be okay just to hold it there. Or you can put this money into, for example, some tips, some treasury protected, some treasury inflationary, what is it called? Treasury inflation protected bonds. There you go. Sorry about that, guys. Sometimes my language just doesn't come out right, okay? But those are basically securities or equities. Well, securities, not an equity. Securities that you're basically able to put your money into that basically combat inflation. So this way, your money is safe and it does have for the same retained value before inflation actually ate it up, okay? So that actually might be a good idea if you're looking at investments that are 5 years into the future or so, okay, guys? But overall, that's it. You can't control it. I can't control it. Worrying about it doesn't make any sense. So watching more videos on the internet about this isn't going to help you. Just stick to the plan. Keep investing. Make sure you're secure. And also, the less debt you have to no debt, the better off you're going to be. As always, guys, thanks for watching. Like, subscribe, hit the bell so you're notified. Comment down below any questions. Up here is another video. Over here is my face. Subscribe. And as always, long-term team officially out. Peace. Euro.